Good morning, friends. I am Devash Vakil from HDFC Securities. Today, on 6th August early morning, we are recording this video. We will be celebrating 75 years of our independence in another 9 days from now. It is a great moment for all of us. I take this opportunity to convey my warm greetings to everyone on this historic occasion. Today, in a change of order, first I will invite Vinay to share his outlook from the technical charts. Then we will have Nandish, who will tell us what derivative data is foretelling about the market. And in the end, I will share international key events and how global markets have behaved over the last fortnight and last 1 month. We'll also discuss August monthly strategy and how one should navigate the markets. So now let's invite Vinay to share views based on technical charts. Over to you, Vinay.
Hello friends, myself Vinay Rajani, Senior Technical Analyst from Retail Research Department of HDFC Securities. I will take you through the technical developments on Indian markets and will share our view for the next fortnight. So let us directly jump to the slides. This is a Nifty weekly chart, and we have seen that Nifty has risen more than 15% from the June 2022 bottom. So from the level of 15,200, Nifty has reached to 17,500. Now next resistance according to us comes in at 17,800 to 17,900, which happens to be the downward sloping trend line resistance. MACD and RSI on the weekly chart has turned also bullish. This is a clear-cut crossover sign on the weekly charts, and RSI has also given a trend breakout. So primary trend of the Nifty is bullish. Now let us move to the Bank Nifty. Now Bank Nifty has also risen more than 18%, and it has also given a breakout from the downward sloping trend line. Now the 37,000 was the previous resistance. Now it is expected to act as a strong support going forward. So keeping that stop loss in mind, one should remain bullish in the Bank Nifty. The next resistance for the Bank Nifty is seen at 38,765. About 38,765, we can expect Bank Nifty to move towards the 39,500 also. But that is a conditional thing, and we need to remain cautious, and we need to see the levels very precisely. Once we move towards the resistance level, we need to profit book also at that level. So currently, we feel that primary trend of Bank Nifty is still positive, but short-term correction cannot be ruled out. Now this is a Nifty mid-cap index chart. Now this is the weekly chart. The downward sloping trend line adjoining the weekly highs gives the strong resistance around current level. Now the Nifty mid-cap index actually has risen more than 21% in short span of time. So after rising this much and now reaching to the resistance level gives the cautiousness sign in the mid-cap index. So risk reward ratio is obviously not favorable. In July month, there was a lot of opportunities mid-cap index also. So after rising this much, we are bit cautious at this point of time. Now let us move to the Nifty daily chart. Now short-term trend of Nifty is still bullish, but the indicators and oscillators have turned overbought on the daily chart. So this is the MFI indicator and this is the RSI, which shows the overbought sign on the daily chart. Now on Thursday last week, we saw that Nifty formed a bearish hanging man pattern. After a rise of more than 15%, if this kind of formation is there on the daily chart, we need to give respect to it. Now high of this candle was around 17,500. So that could act as a strong resistance going forward. Above 17,500, we can expect Nifty to move towards the positional resistance of 17,800 to 900. So though we have not got the bearish confirmation as of now, but cautiousness should be there because we already seen a rise of 15%. Now let us conclude. Nifty is currently in continuation of an uptrend as it has been holding above the 50, 100 and 200 days moving averages. However, indicators and oscillators have reached the overbought zone on the short-term chart of Nifty and Bank Nifty. After such a steep rise of more than 15% in Nifty, 18% in Bank Nifty and 21% in mid-cap index from the June 2022 bottom, running correction cannot be ruled out anytime. Though the primary trend is up, risk reward ratio for initiating longs from current level is not that favorable as compared to the previous month of July. Stocks and sector specific bullish moves may continue, but trading bet should be taken only with the tight stop losses from here. Buying on dips could be the better strategy as the primary trend of the market is bullish, but short-term oscillators have turned overbought. Short-term resistance for the Nifty is seen at 17,500, which is a hanging man high. above which it could move towards the next resistance of 17,800 to 17,900. Bank Nifty has got support at 37,000. Resistance for the Bank Nifty is seen at 38,765. Far resistance for Bank Nifty is seen at 39,500. At present, existing long in Nifty should be held with a tight stop loss of 17,000 and Bank Nifty should have a stop loss of 37,000. Thank you, everyone.
Thank you, Vinay. Now let's invite Nandish to share his views. Over to you, Nandish.
Good morning, friends. Welcome to this webinar. I am Nandish Shah, derivative analyst at HDFC Securities. Today, I am going to share how the market is looking from the derivative side. So let's straight away jump to the presentation. We have seen long build-up in the Nifty futures during the August series till now, where we have seen 21% rise in the open interest with Nifty rising by 2.76%. Long build-up is seen in the Bank Nifty futures also, where we have seen massive 32% rise in the open interest with Bank Nifty rising by 1.45%. Amongst the Nifty weekly options, we have seen put writing at 17,000 and 17,200 levels. Therefore, on the downside, we believe that 17,000 to 17,200 level to act as an immediate support going forward. On the other end, Nifty is likely to find an immediate resistance in the vicinity of 17,500 to 17,600 levels where calls have been written. So as you can see from this option distribution chart, we have seen aggressive call writing at 17,500 and 17,600 levels. And therefore, this range of 17,500 to 17,600 level is going to act as a strong resistance going forward. On the downside, 17,000 to 17,200 level to act as a support going forward. Coming to the FIs figure in the derivative, we have seen long build-up by the FIs in the index future segment on Friday, where the net bought worth rupees 900 crore with their open interest going up by 8,300 contracts. And therefore, the net long to short ratio in the index future has risen to 1.23 levels on Friday, as against 1.07 level on Thursday. In the cash segment also, if you remember, FIs were seller aggressively since October 2021. But after 9 months of relentless selling, they're selling a better in the July series, and now they have turned buyer in the first 6 days of the August series, where the net bought was rupees 8,000 crore. This augurs well for the market in the coming weeks. This chart shows the FI's net long to short ratio in the index future versus the Nifty movement. So as you can see from this chart, FI's net long to short ratio was around 0.1 in the month of June, in the mid month of June. And from that level, it has started rising and now it is placed at 1.23 levels. Along with the rise in this FI's net long to short ratio, Nifty has also risen sharply. So this indicates that there is a positive correlation between FI's net long to short ratio and the Nifty movement. As of now, FI's net long to short ratio is placed above 1. This indicates that FIs are believing that Nifty is likely to remain strong for the coming weeks. Now coming to the breakup of the open interest in the index future. So this blue line suggests the net FI's figure in the index future segment, and this rising blue line indicates that FIs are creating longs as we discussed earlier, and this light blue line represents the client's position in the index future segment. This indicates that client's net long to short position in the index future is falling. So both these things, on the one hand, FIs are creating fresh longs, while on the other hand, clients are reducing longs. So this data also indicates that markets are likely to remain strong for the coming weeks. So now coming to the outlook for the Nifty, to sum it up, considering long build-up in the Nifty futures, put writing at 17,000 to 17,200 levels, long build-up by the FIs in the index future segment, where their long to short ratio is above 1, and also the put call ratio, even after a sharp rise in Nifty from the June bottom, put call ratio is still placed around 1, which indicates that it has not reached to an overbought level, and which augurs well for the market. So considering all these derivative indicators, we believe that one should continue to remain bullish. However, considering the sharp run-up during the last few weeks in the Nifty, we should not rule out the possibility of running correction. Therefore, in Nifty, our advice is to remain bullish and use any decline to accumulate longs with the trailing stop loss of 17,000 levels. On the higher side, 17,500 to 17,600 level to act as an immediate resistance where we have seen call writing. Any close above 17,600 level would result into further short covering, which might push Nifty to even 17,800 to 17,900 levels. Now coming to Bank Nifty, as we discussed earlier, we have seen massive long build-up in the Bank Nifty futures, put trading at 37,000 to 37,500 levels, long build-up by the FIs in the index future segment, and also the outperformance by the Bank Nifty in the July series. We believe that in Bank Nifty also one should continue to remain bullish. Similar to the Nifty, in Bank Nifty also, considering the sharp run-up from the recent low, possibility of running correction should not be ruled out. Therefore, for in Bank Nifty, our advice is to remain bullish and use any sharp decline to accumulate longs with the stop loss of 37,000 levels. On the higher side, 38,000 to 38,200 level to act as an immediate resistance, as we have seen call writing at 38,000 levels. Any close above 38,200 level would result into further short covering, which might push Bank Nifty to even 39,000 levels in the coming weeks. That is all I want to share.
Thank you, Nandish. Now let's see what are the key international events and how they are shaping the international markets, how global markets have behaved over the last fortnight and last 1 month. So many of you will remember that at the end of the July month, US FOMC raised the interest rates by 75 basis points. So earlier, before the June meeting, they were at 1%. They have increased the interest rates by 75 basis points 2 times. So 1 to 1.75, and now from 1.75 to 2.5% in 2 successive meetings. Similarly, our RBI Monetary Policy Committee also raised the interest rate yesterday from 4.9. Now it has come to 5.4 in the repo. And similarly, all other policy rates have increased. Now, yesterday, payroll report from the Labor Department in US came, and there the employers added another 5.28 lakh non-farm payroll jobs, which is much higher than the 2.5 lakh was the expectation, almost double the expectation from the economists. So this is a very strong data. So in an environment where Fed is looking to raise rates, this data will not help the cause. So US FOMC will keep increasing the interest rates. Now the key question is whether the higher interest rates to contain this inflation will lead to recession in US and other parts of the world or not. Now let's look at the important markets and how they have behaved over the last fortnight. So the US markets have gone up between 4 to 6%, Nasdaq being the one of the main gainers across the world, almost 7% over the last fortnight. Over the last 1 month, Nasdaq has gone up by 12%, Dow and S&P are up between 6 to 8%. Let's look at the Indian markets. So Sensex and Nifty are up about 4% over the last fortnight, and over the last 1 month, they are up by 10%. So over the next 1 month, let's look at the key important events. So Japan GDP is going to be announced on 15th of August, and on 25th of August, we will have US GDP and core PCE data coming in. Apart from that, there are a lot of holidays like 9th of August, 15th and 19th are holiday in India. 11th is the holiday in Japan, while 29th of August is the holiday in UK. Let's look at the sectoral performance of Indian markets. So many of our loyal readers would remember that last time when we did the webinar, we said that the IT and metals are the key areas to focus on. And if you can see over the last fortnight, metals have gone up by 9% and IT has recovered by 6%. Similarly, over the last 1 month, metals have been one of the top performers. Earnings season is going on and earnings are on track. In USA, out of the 500 companies, 430 or 86% of the companies have already announced their results, and those numbers are better than the market expectations. In India also, earnings are more or less in line with the analyst expectations. So many of you would remember that we had come out with a strategy note and a picks in volatile time on the June 16th around the market bottom, and those stocks I'm sure you have started accumulating. 7 high risk stocks and 7 medium risk stocks we have already recommended. We also came out with the August monthly strategy on August 2nd, and one of the key highlights is there the worry over the Chinese property markets. The Chinese banks have over the years have led to this sector where a lot of defaults have started coming, and this is a major worry, one of the worries across the world, how China is able to contain the fiasco in its property markets. So how you should position yourself over the next fortnight and 1 month. Our theme is better to be safe than sorry. So we have already seen an impressive rally from mid-June lows, and we were able to call that out with the help of content and indicators. This rally is aided by the weaker commodity prices, easing inflation expectations, and lower bond yields. Now the technical oscillators have reached the mildly overbought levels as discussed by Vinay. So we continue to remain bullish with the 17,000 in Nifty and 37,000 in Bank Nifty, but the risk reward is not favorable for aggressive long positions in the short term. So it is better to be safe, gradually reduce the aggressive positioning you have in the market and create room for volatility. We will continue to bring out various recommendations over different categories. So as you can see on the screen, many of our recent recommendations have done exceedingly well. MTF calls like Snyder, Nosil, Bajaj Finserv. On technical side, cash positional calls like Ramco, Telboros have given 16 to 10% return in a matter of few days. And on the fundamental side, many of our recommended investment ideas have started hitting their second targets. For the likes of Mirza, which has given us 23%, West Coast Paper Mills have given us 19%. So many of our ideas have started hitting their second targets and giving us excellent returns between 15 to 23%. So we will continue to bring out such recommendations. I hope you continue to use these recommendations and make best use of this. Thank you friends for watching this video. I hope you find this fortnightly video series useful. If you have any comments or suggestions, you know how to reach us. You can send us the message on our WhatsApp groups or write an email to us. Thank you all for viewing and have a great weekend ahead.